You may have heard the old adage, sell in May and go away. We're going to explore that in today's Markets in 5 episode. However, before we jump in, just want to share a bit of personal news. My oldest son, Carson, just wrapped up minor seminary, and his mother and I are extremely proud of him. So keep him in your prayers as he continues to discern his calling. But let's jump into this week's Markets in 5. So jumping right into the S&P 500, you can see that we're in a bit of a wind-up or a coil. You've heard me talk about this in the past, where essentially you have lower highs and lower lows, where essentially it starts to coil or wind. And so it's going to either break up and continue up to this upper range of the channel, or it's going to break down and lose the support of the 100-day moving average, the pink line. And so then we would look toward other channel markers or channel trends, as well as the 200-day moving average down here would be a nice level of support for buyers to come back in. So this range would be kind of where we would look to buy back in if this thing drops down a little bit. Or at least reposition some assets. But certainly if it does break up, that would be a good sign. As of right now, the price action is above all of its moving day averages. So that's good on a daily read. And then you see the RSI has popped back above 50, which is good. That's always something I'm looking for. Now it can gyrate up and down, so it's not, we want to kind of get it up there and keep it up there. But right now it is positive, and that's good. And then you have a positive crossover on the MACD, and it seems to be rising and trying to pop above zero as well. So right now, everything tells me that this is not the beginning of a major kind of pull down or anything at this point. So, we're watching the levels really closely. So I would say sell in May and go away. This chart does not confirm that. So, we want to just continue to watch this wind up and ultimately determine, does it break up or does it break down? In this chart, we've got a reading on the financials. So this is the XLF, the ETF that tracks the financial market. And essentially, I wanted to highlight this one for a reason. Obviously, if there is a sell in May and go away, if the market can't hold its level and does drop down, obviously what we want to do is continue to search for the various sectors and subsectors that are continuing to do well. And right now, financial seems to be doing very well in the short term, right? So you've got this coil or wind up that did resolve itself to the upside, and it did break out above its most recent high. So that's a good sign. So we don't know, if it comes all the way up here and finds resistance and drops back down. But for the short term, the very short term, it looks very good. You've got a rising rising RSI that popped above 50 and is coming and very constructively having higher highs and higher lows. And the same goes with the MACD, higher highs and higher lows, crossover positive, and just crossed over the zero mark, which is, again, very positive. And then we've got an ADX reading here that just popped above, just a positive crossover here on the ADX. So this all tells us that the financials look pretty good right now. So, we'll be, hunting and pecking inside of that sector and subsector to identify kind of the winners and where we want to start deploying some money within this sector, at least for the short term. All right, the last chart I really want to kind of highlight in today's episode is the unemployment rate. So when you look at the unemployment rate historically, you can see that when the unemployment rate rises, it generally coincides with a drop in the market. So of course, this is COVID, and that's just kind of an anomaly. But essentially, we have definitely based in the unemployment rate, which is historically very, very low. So as this continues to kind of creep up and climb a little bit, we want to watch it closely. Now, it's a slow-moving indicator. That's more of a coincidence indicator as opposed to a leading indicator. So, it's not going to tell us with a lot of advance notice that the market's dropping, but it certainly will confirm a move in the market. But we have other leading indicators that we're watching, but it is certainly one that we want to keep our eye on, because as that rises, you will more than likely see the market drop, pretty hard. So sell in May and go away is certainly a catchy phrase that sometimes comes to fruition, but I think you've got to, follow your own path, follow your own indicators, and ultimately do your own research, because not always does it work out. But it is something to at least be aware of. But if you have any questions, give me a shout, and I'll see you on the next Markets in 5.